Good morning, guys. Jessica Couch filling in for Ian Boshoff this morning with my co-pilot, Joseph Muscles Madrid. Do you like the nickname? I give you a new one every week.
I love it. I always love it.
We are pro mortgage and real estate. We are a white glove approach boutique where we're handling both your mortgage and your real estate, which is how it used to work way back in the day. Yeah. And I'm so glad to have a piece of this again. 10% of our show profits go to Sweet Dreams. Sweet Dreams is an organization that we're involved in as a brokerage, and I've been personally involved in for a long time. We do dream bedrooms for children battling life-threatening illness. And if you are somebody who would like to be involved in the nonprofit world, if you have $5, 5 minutes, I'd encourage you to text me and I could get you in. We always have kids' rooms happening if you want to volunteer, and we could use anything and everything. You don't have to be handy with IKEA furniture, but you can reach me direct if it's something you want to be involved with, 916-532-8916. I wanted to start this morning with kind of a lender update. So I know in my world, rates are very important, sure, right? I would need to know what's going on. And yesterday at our meeting, which I'm so glad we get these downloads from Ian every week with where we are today and where we're going, there wasn't a lot happening. What's happening this morning, Joseph? Where are we right now with rates and such?
Yeah, it was not the news people wanted to hear, right? But it wasn't bad either. So the CPI, which is,
can you tell us what that is for the people that don't know all of our abbreviations for
sure,
the language we speak that others don't?
Exactly. The acronym CPI is Consumer Price Index.
Okay.
And this Consumer Price Index is an indicator that they look to determine what consumers are going to spend in the forecast.
Okay.
And so the number that they had forecasted was kind of freaking out Wall Street. And so in order to hedge against what could possibly happen, then they raised rates slightly. Now, as Ian brought up yesterday, it's a knee-jerk reaction. That was the best way to put it, because it always is. They always kind of freak out and hedge against it. But it was an empty knee-jerk reaction. So basically, they built in this little rate hike just to protect against something that didn't happen. So more than likely, in the next couple of weeks, we're going to settle back down to where we were previous to that meeting. The other thing is that they were looking at is not only the CPI, but they also look at the jobs, right? How many jobs are on the market, and that also was overly inflated. So that's the funny part, is that's constantly overinflated.
Ian talks about this a lot.
Yeah, if people were just pay attention to that when it comes out, it's never right. It's always too high, 100% of the time. So,
and why is that? Why do you think that the job reportings are being inflated?
I feel, not to get into politics,
But no, I'm really curious. Yeah, like what's the point of that?
Yeah, so that's what it is, in our humble opinions, that we feel it's more of a regime thing, to keep things where they are. And as we're going into this election time.
Oh, so that's it. That has a piece of it.
Yeah, it's a lot of it, because they want to win favor. And the funny thing is about our political environment is, and I won't get too much into this because this is definitely a grenade. So I won't pull the pin. But the thing about politics is this: if people can remember, the same thing happened when Trump was running against Clinton.
Oh,
okay, literally the same thing. So when Trump was running against Clinton, Obama had just come out of office. So, Clinton had been the favorite, as we know. And as that was happening, very similar things were happening in the market. Now, it was assumed that she was going to win all the way up to like the last week.
Oh, interesting.
And so at that time, the market really spoke to that. And it was terrible. I don't know if you remember, the rates went up. The market was terrible. Everybody froze. And then Trump got elected. Now, the thing is when Trump got elected, rates actually went up a little more because of the uncertainty. But as we know, then that regime brought in the lowest interest rates we've ever seen in the history of interest rates.
True, which, I think, we're going to talk about predictions a little bit later today, but I don't think we're going to see 2.25 again.
No.
Not in my lifetime. I don't think we're going to see it.
Yeah, I agree. That was the white elephant. White elephant, or what's another one? The white rhino. Right? That's the other one, or white buffalo, right? It's so rare. Anyway, so back to what this news was. It's passed. Like, the scariness has passed. So So now we're going to shift back into settling down and getting into normalcy. Now, the issue, though, with that, like we brought up yesterday in the meeting, is that pushes out the assumed next rate cut. Pushes out a little further.
I'm holding hope.
Me
Joseph.
too, right? We were thinking it was going to be more like maybe March and May. But since then, after this has happened, we feel now it's probably going to push back maybe to the end of May and into June.
Very interesting.
Which is cool, though, right? And on the real estate side.
It would be great if it held more room for our borrowers, our buyers.
Right.
It'd be great if it held more room for that, because I sound like a broken record. I'm confident come April and May, our market's going to swing back the other direction.
Yeah.
And we were talking about this yesterday too. And I want to get into that, and I want to get into what our inventory looks like, because I hear a lot of people say we don't have inventory.
Right.
But I can tell you, I pulled a number yesterday. Here's a teaser question for you guys. We had a pretty big number of new inventory come available this week, and I'll get your thoughts on it. If you're following me on social media, you know what they are. But if you're not, you don't.
Yeah.
A ton of inventory. So I want to get into that. Like we were talking about that yesterday at our meeting. For the new homeowner under 500, yesterday we were having this discussion about how it's based on their payment comfort.
Right.
People that can even squeeze up a little bit higher in purchase price really are not comfortable with that because of where the rates are.
Right.
So we were talking about doing the buy down, which is like my favorite thing to do. Well, the buy down is possible to have the seller pay for when we have inventory.
Yes.
But if we don't have inventory below 500, or that's where it's really tight, and we're going to go get into those numbers and kind of where this inventory is,
Right.
because there's definitely inventory, but we don't have as much of it for those first time borrowers that are getting beat out in that big audience of under 500.
Sure.
And then there isn't room for the credits that we need to have.
Right.
So if rates were to stay high for a minute, I think that might open up some additional opportunity if you know what your opportunity is. If you understand, if you get into a property that needs some work that everyone else has looked over, that's been on the market over 30 days and it fits your price range, get in, get the work done, get some sweat equity, and get the seller to pay for your buy down.
Yeah.
If you can get a temporary buy down, now you can handle the payment, and that's how you're going to be able to get into something.
Yeah, I love that. And what it reminds me of is when the pioneers were coming to the West, right? And I don't know how much you know about history, but at that time, there was a lot of people coming to the West.
Right.
But a lot of people wanted to wait because they wanted to see, well, what's going to happen?
Right.
When
Right.
they get
Yeah.
there, well, let's see what they go through when they get there, right? And then by the time they got here and
Uh-huh.
said, hey, it's awesome, then everybody came at one time.
Right.
And it was this mass exodus, and there was a struggle for people to find land. There was a struggle for people to get around water. It's kind of very similar to now, right? That I love what you brought up. It's kind of good what happened yesterday in the market, because that's going to create like another 30 to 60 days where we have time to get some buyers into the market.
Sure.
And where sellers are going to want to play ball, because like you said, they're still coming into the market.
Yeah.
But they're going to have a tough time selling because the rates are kind of hovering around the same place, right?
Yeah.
So it's a great opportunity, like you said.
It is.
To get people to take advantage of that, because just like coming to the Wild West, everybody wants to wait, right?
Right.
And as you've been saying, in the next 60 to 90 days, that wait's going to turn into an exodus.
Yeah, no, I agree. Well, and yesterday when we had this conversation, I was telling the agent, or the lender, actually, that was on our call, that was talking about this. I have a property coming up, and we're listing it for 500. I need to get close to 500, but my sellers are prepared properly that we're going to have to kick down 2% for a buy down. That's what a buyer's going to ask for. Sure. So I know with the listings that I'm taking, I'm making sure we have that as part of our spread, because my sellers are aware what they need to pay for. But I've got two properties coming up, one at 5 and one just above 5. Both great properties with a pool. If you're somebody that's still thinking about getting off the fence, call Joseph, right? Let's get you pre-qualified, get a soft pull. Like, what's your number, Joseph? How do we start the process?
916-849-8925.
And we're going to go through that again later. I feel like we need to go through this every show with, 1, 2, 3, this easy step process that we can get you in, make sure that we know what you can qualify for, and what little hiccups. Like, I'll give you a great example. I'm working with the family right now. They've got a lot of cash available, but we're coming in with at least 50%. Slam dunk. They're all employed. I have multiple members of the family. I figured they had good credit because I know this family. Here's the problem. two of them don't have any credit.
None.
They don't have any debt. They pride themselves on not having any debt, but they have a ton of cash. That's great. However, it's going to take 30 days for this to work itself out so we can show that they have credit. Because without having any debt, we don't have a credit score to show how responsible they are.
I love that you brought that up. That's such an amazing point that I think is
a quality
lost.
problem to have.
Yeah, but I mean, that's an amazing point you brought up, because rarely is credit aptitude brought up in what we do.
Right.
It's very rare.
Yeah.
Right. And that's the key. That's the fuel that drives the car. So I really think that's important that you brought that up. And we could talk about that another time, but to understand your credit and to speak with professionals that can put you in a credit position that gives you the advantage.
And I think this is as easy as this, 1, 2, 3, right?
Yeah.
They call you, they text you, they can even text you. This doesn't even have to be a scary conversation. You're at work or you're listening, you're driving, you on your way to dinner. You could text Joseph, set up an appointment time. We need 10 minutes of your time, online application, and you're gonna get ready for the next step in your life.
Yeah, 100%.
All right, when we come back, we're going to talk about some inventory and what we have actually available in the price range for our big audience under 500.
Hi, I'm Ian Boshoff, CEO of Pro Mortgage and Realty. At Pro Mortgage and Realty, we've streamlined the home buying process, providing you the fast mortgage pre-approval and top-performing real estate agents that will negotiate the best price for you, all under one roof. If you call or text to 916-872-7177, that's 916-872-7177, we'll help with those out-of-pocket expenses like home inspection, appraisal, and closing costs. We make it easy. From down payment assistance programs, no income qualifying loans to conventional FHA and VA loans, we have you covered. We'll help you find the right financing program and the right home. Be sure to ask about our temporary buy-down program that's negotiated towards your interest rate and can end up saving you thousands. Work with a team that's with you every step of the way. Work with the pros, Pro Mortgage and Realty. Call 916-872-7177 or visit promortgagerealty.com.
NMLS number 351319, DRE number 017456667.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 0174567.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
And we are back. I love that Ian gave us that name, the Real Estate Profits with Purpose. I just love that altogether, especially the way he spelled it. I do feel like there's some prophecy in what we're doing. I mean, there's a whole lot of research, don't get me wrong, but there is some prophecy. Just before the break, I asked everyone if you knew how much inventory we started off the week with. I just told you, Joseph, but if you didn't know and you just had to throw out a guess, what would you think we have in way of inventory at the beginning of the week, this week? Where are we? Mid-February. What would you think we have? Because you're your lender. Yeah. You're constantly working with realtors that tell you there's no inventory, right?
Right.
There's no inventory. We can't find anything. There's no inventory.
Right.
So we're stuck. So what would you assume we have in way of inventory at the beginning of the week for our Tri-County area?
I mean, that's a good question. Let's say around 1,500.
So this week, and it's higher now today, this week we started off with 2,225 new to-market homes.
Wow.
Of those, we had 835 that had price reductions that have already been on the market. So I'll dive into that a little later on our show and talk about some homes that meet that sort of minimum standard that the bigger audience is looking for. I'd say under 600,000, a lot of them under 5.
Yeah.
But we still have inventory available.
Yeah.
Something I wanted to get into is a lot of these acronyms that we hear thrown out there, and something that's come up a lot in my world this week is the DSCR loan.
Right.
Can you talk a little bit? What does it stand for? What is it about? How is it different than an FHA loan? Can you speak to that?
So a DSCR loan is a debt service loan, and basically what it is these are investor loans, and they're created strictly for investors. And how they work is it's based strictly on credit score
Okay.
and the property. So when they put these together, you're going to get what we call a 1007, which is a rental survey.
Okay.
And that's going to be part of your appraisal. And that's how they're going to determine what your income for that property is.
I have a question, if I can interject. We were talking about this yesterday with the pro forma,
Yeah,
right? A
right.
pro forma is a theory of what your property could do. It's a
Right.
theory. It's not real life, guys. It's a theory. What if this is a vacant unit? Nobody's occupying it yet. Would the bank look at a pro forma to figure out, or they're basing it on this rent survey?
They're going to base it on the rent survey.
Okay.
Yeah.
Okay.
And
so
so-
if I think the point of this is if your agent has given you a pro forma and you think that theoretical number is going to be able to help you get the loan, you also need to understand they need to do a rent survey.
Right.
Okay. It's like similar to an appraisal.
Right.
And they're going to figure out what that property is really going to rent for. And that's how they're going to base your financing options.
Exactly.
Okay.
So
Okay.
it's basically going to be, just like any other appraisal, they're going to find the light comps, but the light comps are going to be properties that are similar
Sure.
to the subject property, but also that are investment properties that are collecting rents. And so that's going to determine what the assumable rent is going to be, or the assumed, I should say,
Okay.
rent is going to be. Now, if you already have rents in place, here's the cool part. There are some lenders that will take the higher of the two. So sometimes, like there's one I'm working with right now where they have it currently leased.
Uh-huh.
But the leases that they have currently are less than what the 1007, the rental survey, brought us.
Okay.
So the lender said, well, we'll use the 1007.
Mm-hmm.
So it's pretty rare where a lender will use the greater of anything.
Uh-huh. Right. Yeah.
But this is an instance where they will. So it's a pretty cool loan, especially for investors because, again, they only use the credit score and the property. There's no financials, no tax returns, no W-2s, no pay stubs, nothing like that. It's
Wow. That is a really good option.
Right.
And you can use this on how many units can you go up to with this?
I think this one you can go up to 11.
Okay.
I'm
So
not
even a small
mistaken.
apartment complex could quantify.
Yeah.
Okay. Interesting.
Yeah.
I like that.
It's pretty cool. So
And what is another underutilized, I'm putting you on the spot here because
Sure.
this isn't our notes, but what's another underutilized loan program that you've had some success with that maybe people don't know about? I feel like we're so quick to throw out these acronyms of like, oh, you know, down payment, we have down payment assistance. We've got, we just rattle them all off. Oh, we've got a USDA. Then we don't really break it down and talk about what these mean and what the advantages or disadvantages of these other loan products that aren't just our typical FHA and conventional or VA. Love doing VA too.
yeah, VA is awesome.
Yeah.
One that I think that people aren't as aware of, but there's a huge pool of these people, self-employed.
Ooh, yeah.
Yeah, so self-employed, it's
What are you
one-
going to do with those guys?
it's-
What kind of loan are they going to get?
Right, so there are bank statement loans. There's alternate income and alternate documentation loans for self-employed. As we know, being self-employed ourselves, we tend to write off as much as we possibly can, right, to better our financial position, which
100%.
most self-employed people do.
Right.
The problem is, though, is that Uncle Sam's going to get his money somehow. He's either going to get the money from you in your taxes, or he's going to get the money from you in your home. And the reason I say that is because usually when you're self-employed and you go to a conventional loan, they're going to require you, usually based on income, you're going to be 20, 30% down because most self-employed people don't make as much on paper
Right.
as they actually make.
Sure.
But they do in their bank account, right? That's where they hold all their funds, whether
Sure.
it's a business bank account or personal bank account. We can use 1 to 2 years history of those bank accounts to count as income and get self-employed people into homes.
Love that.
Once they get into a home, here's what I tell our clients all the time. You're going to have to bite the bullet and shake Uncle Sam's hand for a year. Get your taxes done. Normally, maybe you're going to have to pay, but it's the one time you're going to have to because your home's an important event, right?
Yeah.
So when you get your home, we'll get you into a self-employed loan. The first year, we're going to have to do your taxes regular. But what the advantage to this is then we're going to get you into a normal loan. Mm-hmm. Once you get into a normal loan, the rest of your life, you can do whatever you want. If you decide to stay in that house, you can run your taxes the way you want because now you already own the home.
So you bite the bullet. You come in with a higher amount down. You probably have a higher rate because you're in a self-employed loan.
Right.
We make sure that your taxes represent something pretty close to what you're really making. Mm-hmm. You're going to have a bigger tax ramification, but you're going to be able to get into a lower interest rate regular loan. Yes. And if you time this right and you did it like right now, you can have a great amount of equity in 12 to 18 months. Get your taxes redone, and then make sure. And if you're a corporation, there's like a million ways to cut this that are running through my head right now that is too much information to just spit out. But if you're really self-employed and you're a corporation, there's a great way that you can split this up and make it work. Yeah. Fix your taxes. You're going to have a higher tax ramification. You can get in a loan product with a lower interest rate and then build equity. Yeah. There's nowhere else. You're just going to build equity at 10 to 20%. Right. There are few vehicles that you can make 10 to 20% on. Yeah. And this being one of them that you're in control of. Yeah. Your sweat equity, direct result of your equity position and what you're putting into it. So it's location, location, location. Mm-hmm. You find a home in a good area that needs some work that everyone else has passed by and you get into it. I mean, that's my favorite thing to do.
I agree. And the thing about these self-employed loans are if your credit score is good, you can get away with 10%, 15% down. You know, so they're still pretty flexible. And a lot of self-employed people do have awesome credit because they're running their business through their own credit, right?
Yeah.
So they have really good credit. They just don't make a bunch of money on paper.
Yeah, I was going to say, or they do, and they're able to the majority. I mean, I've been in business for myself my whole adult life, so the majority of my expenses, my business absorbs, and therefore I have less of a tax ramification on actual checks that Jessica Couch is taking because I have a corporation, and I know most business owners that I'm in touch with do things the same way.
Yeah. There's a reason. I mean, it's built for you to succeed. We just got to understand the advantages.
No, 100%. There's a ton of loopholes, and I hear people talk about it, not usually in a positive light, but in regard to how Trump has been able to do this. This guy's filed bankruptcy like 7 times. Yeah. You can do this every 7 years. You can do it for your corporation. So I'm not suggesting being irresponsible by any means, but what I'm suggesting is there is a loophole to everything, and the guy that wrote the law wrote it for his advantage. So know what your unfair advantage is. We all have them. Yeah. Once you get clear on what those are, and tying this back to loans, I mean, you can find a way to get into a home. If you're self-employed and you make a good amount of money, but you're not claiming it, hey, Joseph just laid out a plan for you. Yeah. If you are somebody without money, we still have the down payment assistance loans. Now, let me ask you this. Can we still use the buy down on a down payment assistance loan? So,
yes. Now, it's funny you say that. So the down payment assistance is in addition to your loan.
Okay. Right. It's an additional grant or loan. Right. Okay.
So when you get your interest rate from the lender that you're working with, the down payment assistance has nothing to do with you qualifying for that program or rate. That's just a help, right? That's just a helping hand to get you to close the house. But as far as getting your interest rate and buying it down, now here's the key, though. When you have down payment assistance, they do even though if you buy the rate down, they're going to qualify you at the note rate or the note rate.
Sure. And it's going to be a little bit higher because they have more risk, right? Okay. Right.
So just understand that. But the key is we're going to qualify you there in the first place. That's where we're going to start. Yeah. And if you pass that test, then now we know the buy down is going to be a no-brainer.
So I think I want to throw some numbers out after we, on our next segment, I want to throw some numbers out in regard to this because I can pull them up when we're on break here in a minute. But that gave me a great idea. When you're talking about $400,000 home or a $500,000 home, we'll pick a number, right? Your rate's a little bit higher based on the down payment assistance program. But again, you're not coming in with money out of pocket. I mean, very, very, very little, right? Very little. And if you're working with us, we're covering your appraisal, we're covering your inspections. I fight hard I just broke this down for somebody yesterday because he was saying, well, I don't have money. I said, all I need is 3.5%. You've got that in your 401k, guy. And, we're coming in with your down payment only. I get the seller to kick back 6%, 2% 6% for a buy down, 3% for your closing costs, and that one other percent I know I'm going to need for repairs. And he was like, dang, you understand? I'm like, you don't need money. This is all possible.
Yeah.
But if you are coming in without money, and we're talking about a rate of what? Maybe a 6%, something like that?
Yeah.
Okay. And if we buy it down 2% for that first year,
Yeah.
I want to run some numbers on what that looks like, what 6% looks like, what 4% looks like, and then give you some actual examples of homes available in our market. You could call us and we go take a look at them. Okay. Well, stay tuned, guys. When we come back, we're going to give you some real properties and some real numbers. Hi, I'm Jessica Couch. When you're buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and that has the skill set to take care of every single detail. We will get you top dollar if you're selling, and we'll help negotiate the best deal if you're buying, all without spending $1 out of your own pocket. Work with Pro Mortgage and Realty. At Pro Mortgage and Realty, we cover those out-of-pocket expenses like inspections, appraisal, and help with your closing costs. It's our commitment to make your next real estate transaction easy and stress-free as possible. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community. We've partnered with local nonprofits, and we give back. Come work with the team that's got your back. Call or text today. Jessica Couch of Pro Mortgage and Realty, 916-532-8916. Or visit us at promortgagerealty.com. Work with the pros.
NMLS 351319, DRE 01745667.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit promortgagerealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017456667.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Hey, we're back. Before our break, we were talking about our inventory and some numbers and different loan programs that one could take advantage of. So I wanted to throw out some numbers real quick first, because I hear a lot, rates are too high. That's what I hear a lot from borrowers, buyers. Rates are too high and I'm going to wait. And I'm like, no, that is a bad idea. Don't wait, because as rates come down, inventory is going to go away. When inventory goes away, I cannot get you a concession, and you need a concession of 6%, which, until I break it down, most buyers don't even know what they need. They just know they needed money. They didn't really know how much. So we've been talking about that. In regard to FHA, you could come in with just a down payment, 3.5%. You could get that from gift funds from your family, cousin, grandma. You could borrow it from your 401k, which is something I want to get into a little bit later. You could use down payment assistance, right? So we had talked about down payment assistance being somewhere kind of close to a 4, or I'm sorry, close to a 6. If you were to buy it down, we could get something at a 4. So I ran numbers based on that. And there are homes under $400,000. So I just used $400,000 for a good number. If you're going into a $400,000 home with a down payment assistance program, we know your rate's going to be somewhere around 6. That puts your payment at just shy of $3,000, $2,998. It's kind of hefty, right? I've got a mortgage that's a little bit more than that, but this is the rates we're looking at right now, right? When my mortgage that I got in at 3.3, years back, that's a lower mortgage, but we're not going to see that again. We're here now. Yeah. If you're to take advantage of the 2% buy down, that first year, your payment's only going to be $2,500. That's a significant difference. $500. That's significant. Yeah. And we've got some homes that qualify for that I want to get into. So what kind of credit score does somebody need to get into a down payment assistance loan?
So usually you're going to need to be a minimum of 640.
640. Okay, that's not crazy.
Not crazy.
That's not crazy. Now, how often do you see people that have like 600, 620 that need to raise it up to 640?
Well, here's the cool part. Now you can actually get in at 580.
Okay, you just said 640, but you're
Right.
telling me you could get in all the way down to 580.
Yeah. So
How is that possible? And tell me more.
Sure. So here's the difference. So with FHA will go down to a credit score of 580.
Okay.
They have a program called Chinoa.
That's right.
So
Another acronym.
Right. So Chinoa is another grant
Uh-huh.
that will afford people to get down payment assistance at a lower credit score.
Okay.
At that bottom threshold of FHA. The key to that is there's 2 grants usually with that help you get your down payment assistance because it's a little bit of a lower score. But it's not really anything outrageous as far as qualifications go. You're going to have to go to a new home buyer counseling class.
Could you do that before you're in contract and get this stuff out of the way?
You can do it anytime you want.
Okay, so
And
somebody
get
with
your
a
ticket.
580 score and no money could jump in, call you now. What's your number again?
916-849-8925.
They could call you, they could text you, 580 score. So you know how many parents I talk to, like folks in my age group, that have adult children like I have, and they're like, they can't afford a house and they don't have any money. No, we have a program.
Yeah. Yeah. I mean,
Joseph just laid it out. 580 credit score. You can get in with 0 out of pocket for your down payment. Now, you are going to need to show some kind of reserve, right?
Yeah.
What kind of reserve are you going to need?
So usually with those, you're going to need at least 1 to 2% of your own funds.
Okay.
as
Showing
part
in
of
your
the
bank account.
Well, as part of the transaction.
Okay.
So here's the cool part. With these down payment assistance programs, usually 1 to 2%. But as you know, your earnest money deposit is usually 1%.
I always make mine 1,000.
Right? Well, you're good. But a lot of times it's 1%.
True. Yeah.
Right? That counts. That's still your funds in the transaction.
Now,
right?
what if they don't have any money? Could they borrow that from? I'm sorry, not borrow. Could they get a gift
You
from
can get a gift.
grandma or cousin or mom or dad? They could get a 1% gift. Show that that's there, and they're going to need to come up with a little bit of money anyway.
Yeah,
it's not
so-
entirely free.
You're always going to have at least 1% of your own skin in the game.
Okay,
That shows the lender that you're invested in it and that there's
sure. Well, it's less than 3.5%.
Yeah.
So for somebody that doesn't have any money, if you can get family to kick down a little bit of money to you, 1%, everything else could be covered, including that buy down. So at $400,000, and I like to go back to this, even though I hear it a lot lately where people are like, oh, I'm only paying $2,000 for rent at my apartment, so I don't want to move and pay more.
Right.
I hear you. Guess what? Rent's going up 10% every year. And as our inventory dwindles, which is going to happen over this, next period of a few months, as rates come down and our inventory dwindles, property value is going to go back up.
Right.
And we're going to see rent go back up as that happens.
Yep.
So that rent's going to go up 10% every year. You're not getting the write-off. You don't have the equity position. And how are you ever going to retire if your biggest payment continues to go up 10% a year?
Yeah.
I don't even know if that's in line with inflation, with what you're getting in way of a raise. So I think it'd be really hard to create some family wealth without having that play in place to own your home.
Yeah, and it's amazing how easy it is to get into a home. Mm-hmm. Like if you really compare it to other things, it's easier than getting a car.
It's true. No one gives you a down payment for a car. There's no
Right.
down payment assistance for your, Hyundai.
Exactly.
You don't get that. It's not an offer.
And sometimes I feel it's gotten too easy. Maybe that's why people, aren't as apt to get into it.
Interesting.
But I mean, it really has gotten easy. It's gotten to the point where you can get a credit score of 580 to get a home. I mean, that's pretty amazing.
Yeah, agree.
You know what I mean?
Yeah,
To get a
totally
home.
agree.
So
Yeah.
the key is it's mainly income. And like you said earlier, you have a client where there's multiple streams of income because it's multiple family members that have pulled together to be able to purchase this home.
We're not just purchasing. Well, so we're looking for a smaller house with a garage that we could turn into something else and enough room to throw on an ADU. So we're going to get 3 properties out of 1 lot. I'm like, you are living my dream.
Yeah.
Like, I love this idea. And I love the ingenuity and the creative side behind this, that this family's like, we don't need a mansion.
Yeah.
We need 3 small homes. We're all at work all day long. We just need enough room to be here as a family. And that investment, and we're looking at stuff under $600,000. That's going to work for 3 families. It's amazing.
Huge. Yeah.
Amazing.
That's so awesome.
Pull together with your family, people.
Yeah.
Pull together. That's what we're meant to do anyway.
Well, yeah, and you want to be able to control your living.
Absolutely. Yes. And control your finances. And this is a way to do that rather than renting 2 separate apartments.
Where someone else
get a
controls your living situation.
Yes.
Right? Because
yes.
depending on what they do, I'm sure you've been in various circumstances, as have I, where a seller decides they want to sell.
Sure.
And now our client is all of a sudden, them getting a home, it's accelerated because of somebody else's life.
Yep.
Right? And so this is where you have an opportunity to not only take control of your life, but to develop something like you said last week for your family, right? Something that's going to stay in your family, teach your family home ownership, and make it something normal in your family.
And I think we don't talk about this enough either. If you know your landlord's like, hey, we're thinking about selling maybe summer, spring, call us right away. Yeah. If that guy or gal or family is thinking about selling the property, let's get eyes on it. Let's figure out what that property's worth, and let's see if we can help you with just paperwork. I've done this for a lot of people. Yeah. Saved the seller 6% they thought they were going to pay on real estate fees and kept our buyers in the property. Right. I didn't make a dime on any of these that I've done. The money is not my main goal. It's the referrals. Yeah. And if I can come in and help a family, that family is going to continue to refer me. When you're really worried about your client's best interest and money's secondary, which is how we work here, then I think we get all those referrals. Yeah. And I've continued to get referrals from folks that I've done this with.
And that's such a great point, because I have a client I'm working with right now, like you just said, where their seller wants to sell the home. And they're like, oh, we got to get out, and he wants to sell the home. I said, well, how do you like this home? And do you really want to leave? And they're like, oh, we love this home so much. We'd love to stay here. And I said, why don't we figure out how do you can buy it? Right. And they're like, really? We never thought of that. And I said, yeah, let's figure out how you can buy it. You've already lived there. Yeah. And he's probably going to be more willing to play ball with you than somebody else. So we got down to the situation, and he wanted to sell the home for X price. They didn't have X price. But here was the cool part. They had $100,000 in the bank that they were going to use for the down payment on something else, because they thought they were going to have to exit. So I said, hey, Mr. Seller, what if they give you $80,000 ahead of time, and then you start crediting them for their rents or their lease towards the purchase for the next 12 months? And within that 12 months, I will assure you that I will get them home financing. If for some reason they don't, then, hey, listen, you get to keep everything they've done up to that point, and then you get to move on to sell your home. So it sounds like you were working out a lease-to-own option. Pretty much. Subject to creative financing over here with Mr. Muscles. Exactly. I love it. Yeah, and it worked out because they have special needs children, and they've been in this home for 10 years. Wow. So their special needs children are now teenagers, and they've grown up in this house. And so now they get to stay in this house. Oh, I love that. That is a great success story. Yeah, it's pretty neat. Yeah. So I had a similar situation, but it was an agent, a brand new agent. She didn't know anything. God bless her. She thought this home was worth so much more than it was ever going to go for. Yeah. And my folks were saying, this seems ridiculous. We know what's wrong with the house. So I said, let's go look at the options. And we shopped for 2 weeks. We saw all the other options. We wrote offers. We got beat out. This was years back. And so we came back to the property and said, okay, they want to move forward. We took a week to think about it. They want to move forward. And so I said, let's write the contract up with X amount. However, she needs to understand whatever it appraises for is what you're going to pay for it. I knew we weren't going to get this amount anyway up here. It wasn't going to happen. Yeah. I knew that. And I said, listen, we'll plan it here, and I'll take a small commission as the buyer's agent. You're not putting it on the market. And if we don't get that number and it's only appraised value, they will pay $500 over the appraised value, and I'll waive my commission. She said, deal, because she was real confident. I'm telling you, she didn't know what she was doing. And it appraised exactly where I knew it was going to appraise. They got a great deal on the property. They paid $500 more for it. I did it for free. They have brought me a handful of clients since then. And those clients have brought me clients. So I think when you're really out to do your best for your people, and my best wouldn't have just been jumping in. My best, after I saw it, I thought, I better go take a look at all of the other inventory. Sure. So, we had to see what was available in way of comparison to then work it out. So if you're somebody in this boat, they're coming up to thinking about selling, don't wait. Call right now. Let's get comparables. Let's get a plan. Let's figure it out. Chances are we can do your paperwork for next to nothing and save the seller a ton of money, which is going to save you a ton of money. Right. So when we come back, we're going to talk about specific properties that are available under $500,000 that you could get into when we come back.
Hi, Hi, I'm Kimberly Shepard with the Shepard Group. With decades of combined experience, we know what it takes to help make one of the biggest decisions of your lives. Whether it be selling or purchasing a new home, the Shepard Group has the strategies to maximize your profit or negotiate the best deal when putting an offer together and getting it accepted. We're driven by being the difference maker and understand how stressful it can be when making your next real estate move. And we'd like to help you by covering some of those out-of-pocket expenses associated with buying a home, like home inspections and appraisal fees. Giving back not only strengthens our community, but it fills our hearts. That's why we partnered with local nonprofit organizations to do our part. We believe faith without works is dead, and so we ask that you put your faith in the fact that you were right where you were supposed to be when you heard this message, and trust that when you call us, you and your family will be in good hands for all of your real estate needs. Call the Shepard Group today at 916-410-4455 or visit theshepardgrouphomes.com.
The Shepard Group, powered by Pro Mortgage and Realty, NMLS number 351319, DRE number 01745667.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 01745667.
And now more with the Real Estate Profits with Purpose on AM 1380, The Answer.
Hey, we are back. We were just chatting about properties that meet this mark of under 500. We know that there's, so little inventory. I keep hearing so little inventory, but we just talked about how we have over 2,000 new listings this week in our Tri-Counties area, and I have 835 that have had their price reduced. So I'm not going to give you a specific address, but if you're looking for a home, I'm going to throw out a couple that are available. You can always text me or call me at 916-532-8916. Also, if you're thinking of doing something really creative like the family we just talked about that's looking for like a 3-bedroom, 2-bath or a 2-bedroom, 1-bath with a detached garage we could make into living space with permits and enough room to add an ADU, all can be done. You can get an ADU. You're looking at like $200,000 working with a contractor to add an ADU with permits, and it needs to be 10 feet from your property and 20 feet from your neighbor's property or fence line. But on most of these lots, we're looking at a 1/4 acre lot. We have enough room to do both. Yeah. So if you're someone thinking about doing something creative like that, we'd love to chat with you also. So I've got 2 properties right now in West Sac that are both available that were just in front of me, and now I've somehow lost them. One of them was just under $400,000. It is a 3-bedroom, 1-bath, just shy of 800 square feet. Been on the market over 30 days, and price has been reduced. We're at $395 in West Sac. Something you could call me for, and we could take a look at. And then I also have a 3-bedroom, 2-bath that's been on the market just over 2 weeks. Just first price reduction, 3-bedroom, 2-bath, over 1,500 square feet. That's listed just under $500,000 now. So we definitely have some properties available, and that's just one area. Yeah, just one area. Maybe I'll pull up one more for our Roseville area. I also have 2 coming on the market myself. One's going to list at $500,000. Great neighborhood, older Natomas area, 95833. Huge backyard, entertainer's dream, huge pergola, pool, a diving board. They redid a lot of the house. I tend to work with people that go all out. They get into a house and they're like, we got to change everything. This isn't going to work. And these people love to entertain. They've got a big family. Everyone's always over. Birthdays are a big deal. Everything's a big deal at their house. They got big parties, piñatas. They go all out. Yeah. So they really dialed this house to their specifications. The floors, the kitchen. It's like beach theme, entertainer's dream. And we're going to hit the market at $500,000. Wow. And I have another one that we're going to be on the market somewhere around $550,000, but huge 4-bedroom, 3-bath house, backs up to a greenbelt in Citrus Heights. Great property. So if you're someone looking and you're feeling discouraged, you can call me. What do you think, Joseph? Where do you think we're going with some predictions here? Where do you think we're going to be for the rest of the month of February?
As far as rates go, I think we're going to be kind of where we're at now.
Okay.
If people notice that we talked about this yesterday, gas prices.
Oh, can you please speak to this?
Yeah. So gas prices are always a key indicator.
Okay. And why? Why is that an indicator for us to pay attention to?
So the bond market follows oil prices, barrel prices pretty closely. So when the cost of barrels increases or decreases, then you see the change at the pump. Usually when you see that, you can almost bet there's going to be some kind of movement in interest rates. And it proved correct this week.
Right, yeah.
Like I was saying yesterday in our meeting, I saw gas prices go up 5 to 10 cents at every station around the house.
Interesting.
And so I knew then, I said, well, we're in for some news, number one, because we knew they were going to have the meeting.
Smart.
And then number two, I knew not only were we in for some news, but more than likely that news was a little doomsday-ish, and that's why the rates or the gas prices went up a little bit, right? So we'll see probably in the next couple of weeks or so, gas prices start to trickle back down, which will be an indicator that rates are starting to settle back down as well. So probably moving into March, we're probably going to hold pretty steady where we're at. It might go an eighth either way here and there, just depending on the environment that day. But we're probably going to be there, I would say, for the next couple of weeks. When we head into March, we're going to be ramping up for the next Fed meeting.
Okay, so when is that slated to happen? Just sometime in March, or do you know?
So the next Fed meeting is actually going to be in June, but as they're ramping up for that, there's going to be a few things that are going to start coming out. They're going to have a new jobs report. They're going to have the CPI is going to come out again. All that's going to come out prior to that meeting. And so as that happens, lenders are going to build it into their interest rate. So that's one thing that I want to share really briefly. Anytime there's going to be big news, lenders are going to build it in ahead of time. So when people see the rates that they see today, like we talked about yesterday, those rates are already kind of baked in because they had an idea based on what the CPI report was prior to the meeting. So lenders oftentimes, when we see rates go up or we see rates trickle up a little bit, it's usually because they're hedging against news that may be coming out. Everything's always in a forecast with interest rates. Right. So now that we know this, now that we know what's going to happen, that's why we're saying we feel the next Fed meeting is when rates are going to start to head south. Because we've already kind of weathered the storm that they assumed was going to happen, and the storm wasn't as catastrophic as they thought it was going to be.
That's interesting. And it's something to pay attention to, too. I drive a Tesla, so I don't fill up. I haven't filled up in 2 years. I don't look at gas prices, but I definitely pay attention to what I'm paying, per kilowatt when I do have to stop to charge. And I do a lot of driving because my sense of far is very distorted as a realtor because I am, yesterday I was in Forest Hill. I've got another listing coming up over there too. Completely off grid. If you're somebody looking for something completely off grid, which I think if you know me, it's my big dream, completely off grid, a well, all solar and propane, zero electric. And it's on a street that has HOA. So you are not going to have a bunch, they keep a pretty tight rein. There's only 5 homes on the street, and it's great, and it's secluded and so private and completely off grid. Hitting the market March 1st at $550. So if you're someone looking for off grid, I'm telling you, I think this one's going to go real quick to somebody in the Bay Area that wants something off grid. And this home could be used for Airbnb, but the HOA has decided it has to be at least a 30-day commitment. Big deal. Who doesn't want to stay here for a month or have that opportunity for people to get to work from home? It's a great way to spend, your season in the snow with your family. If you can work from home, he's got Starlink there. So you are good to go. It's a Tesla product. You're good to go. You've got a satellite from the sky.
What a
giving you
cool
Wi-Fi.
area too.
Super cool. Super cool.
Forest
you
Hill's
can really get a deal if you head out that direction. And I heard, don't quote me on this, but I know several of my clients, including this guy, is about to get a discount because of the improvements they've done from the fire.
Oh, wow.
So, Forest Hill, year and a half ago, we had a really big fire there.
Sure.
This, I think they were calling it the mosquito fire. Is
Was
that the right
the
one?
mosquito up there?
It was really bad. It was really bad. It came right up to the back of my property. I had to wait to close escrow because of the fire.
Oh, wow.
And fire insurance is a thing. It's my neighbors call it the unfair plan, but I believe the real name is California Fair Plan.
Right. That's funny.
So still a thing,
Yeah.
but this guy was going to see a reduction of like 30% in his overall yearly premium, which is a pretty big deal.
Huge.
So if you are somebody looking for, property and you want to have this creative idea and you want more than a quarter acre, further you go up 80, it's going to be cheaper. Further you go up 50, it's going to be cheaper as well. But you have to go pretty far up 50 to really get a discount.
Yeah. Yeah, you do. You have to get way up there.
Although they're redoing the bridge too, I heard, on your way up to Swansboro. They're redoing that bridge, so it's going to be 2 lanes.
Oh, nice.
The fires have been a real thing in California, and it's really causing some good initiatives that are coming out of exit strategy for leaving your home if you're in a high fire zone. So
yeah, and actually improving those areas too, so that the fires aren't as egregious to the properties and the people that are out there.
Yeah, definitely.
So it's been a big learning lesson, especially from the Paradise Fire. I think that was kind of
well, and if we're talking about these kind of far out areas, right? Like I'm in an unincorporated area of Placer County in Forest Hill. I'm in what used to be its own town called Michigan Bluff.
Oh, yeah.
Really, it's super cool.
Yeah.
Super far, but it's super cool.
It is awesome.
You could use USDA on these products. Yep. One thing I learned with USDA is you cannot own more than one other home. Mm-hmm. So this is for the first time buyer, or the, you bought a home 3 years ago and now you're buying another home. You could use it then. But if you're someone with a rental portfolio, as I am, you're not going to qualify for USDA for that reason. Right. Nothing to do with where the property is, your credit, just a matter of how many homes you own. Right. But if you want to look in these, kind of faraway areas, get some property, you could take advantage of USDA.
Yeah, USDA
is zero out of pocket.
Is an awesome loan. It's 100% financing. The only caveat to USDA is there are income limits per county.
Oh, thank you for reminding me of that. And that's going to move based on the members of your family, correct? So if you have a really big family, you're looking for a compound, as you might, right? Mm-hmm. You could make more money if you have 10 kids versus just you and your wife.
Yep.
Okay, so for somebody with a big family, this is a product that could really work. How do they get a hold of you?
916-849-8925. And here's another thing to think about, too. You can go to USDA.gov.
Oh, thank you for that reminder.
USDA.gov, you can log on.
They could also just text you if they're like, I don't know, I'm driving. Just call Joseph. He'll look it up for you.
And I can help you out with that too. But that'll give you the income limits for the county that you're interested in moving into.
And it'll give you the per family member. So it'll move up. Okay. Exactly. I love that idea. Exactly. And if you don't want to live far away or USDA just doesn't work for you for whatever reason, Joseph just outlined how you could get in with the Chinoa program at 580 credit score. Yep. 580. That's insanity. Okay, so just call Joseph now. Call, text. Give us your number one more time.
916-849-8925.
So I think our line for the show has really been do not wait.
Yeah.
Do not wait. Yeah. We've got this sweet spot right now. Joseph just outlined how we're going to sit pretty for another minute because of what's going on right now in our world. Right. And now would be a great time for you to get in. But it all starts with calling Joseph, getting this 1, 2, 3 done of getting the application, figuring out if maybe you don't have enough credit. Mm-hmm. Maybe you just need a small card that you're using for your gas or, candy, something minimal, right? And outline how you're going to get to this next spot. And it might take 8 weeks. So don't delay. Do it now.
Right.
Call and we can get you into something.
That's it.
Yeah. Okay. Well, I cannot wait to see how many buyers we can help this season.
Yes.
We're coming up to spring, guys. Great time. Don't delay. Call right away. All right. We're going to see you next week. Have a great week.
Awesome. Thank you.